So much to unpack today. Gold hitting a new all-time high. Now, we did see some strength in the US dollar versus other major currencies. Let's get more from Karl Schamotta, Chief Market Strategist at Corpay. Karl, always great to see you. Thanks very much indeed for joining us. Maybe we could pop up a one-year chart for the US dollar index. What is the greenback saying to you today?
Right. I think the dollar is winning the cleanest dirty shirt contest this morning. Basically, what's really happening is that, we are seeing signs of, political turbulence hitting economies outside of North America, putting pressure on currencies like the euro, the Japanese yen. That is, pushing those currencies down relative to the dollar and leading to a modest recovery relative to where we were last week. And so, that is folding into that broader trend in which the dollar has essentially been moving sideways against most major currencies since about June or so. We saw big declines earlier in the year, but the momentum in the currency market has faded off in the interim.
So you think this sell America trade has fizzled out for now, Karl?
Yes, I think it has. I think at the end of the day, we are in a situation in which most global economies are not outperforming the U.S. Everybody's slowing almost at the same time and almost at the same pace. And at the same time, we have this extraordinary push in American equity markets higher. Right, that's attracting huge inflows from the rest of the world. Investors looking to participate in the artificial intelligence rally. That's pushing up, the dollar itself, and all of that is being added to by the sort of flattening out in terms of rate expectations in the U.S. So, economic data has been coming in quite mixed. You do have lots of signs of slowing momentum in the U.S. economy, but you also have signs of stability, and that is keeping interest rate expectations for the Fed relatively stable. And so you're not seeing the sort of mix of things that would typically lead to, widespread extended dollar depreciation.
It looks as though Japan is going to get a government leader who is in favor of heavy spending to stimulate the economy, and that's hurting the yen.
Yes, that's right. So Takaichi is sort of a disciple of former Prime Minister Shinzo Abe. And, her belief is that we should see more spending from the government from a stimulus standpoint, and that the Bank of Japan should avoid increasing rates any further. And so there is the expectation right now in markets that she's going to work with other government partners to deliver, extensive stimulus, which would devalue the yen somewhat, at the same time as she puts pressure on the Bank of Japan to slow its normalization process. And all of that really means, Andy, if we take a look at, how currency markets function in general, that rate differentials will remain tilted against the yen. In other words, it'll be very cheap to borrow yen for a prolonged period of time, and very profitable to take that borrowed yen and invest it elsewhere in what we call the carry trade. And so you're seeing currencies like the Mexican peso, the US dollar, everywhere where the interest rate is higher than Japan, outperforming against the yen. And so we're seeing sort of a almost disorderly slide in the yen itself.
She's seen as an ultra-conservative. I see that she's argued that Japanese war crimes in World War II have been exaggerated. And interesting, though, that she is an advocate of heavier spending. What is your take on France? I mean, France just struggling through one crisis after another, Karl.
Yeah, I mean, it's an extraordinarily fragmented political landscape. Macron really, sort of messed things up last year by calling a snap election and, introducing other parties into parliament and giving them more power, in essence. What it looks like at this point is that we're in the situation where we're not going to get the parties to agree on anything meaningful in terms of fiscal consolidation. In other words, we have big, pressure points being applied against lowering the pension age, doing other things that would put French finances on a steadier footing in the long run. And so markets are increasingly concerned that we're going to see a downgrade in France's credit rating and a downgrade in growth in the years ahead as the government, struggles to make ends meet, as it were, in terms of, driving the economy as well as, managing the debt load that's continuing to grow. And so I think what we are seeing here, though, globally is this sort sort of knocking down of dominoes, right? Bond markets are doing a little like they did back in the 90s in the sense of, sort of roving around the world looking for the weak points, pushing yields up and threatening governments until they get their fiscal houses in order. And that's driving up long-term yields. That's driving up the cost of capital on a global basis, and it's leading to disruption in the currency markets.
What about the Fed? There are commentators out there who say inflation is alive and well in the United States and that the Fed would be premature to cut interest rates much.
Yes, there's definitely a big contingent of folks who are concerned about inflation unanchoring here. We are seeing inflation expectations among consumers begin to push higher. There's little to no question that tariffs have led to, sort of cost push inflation in the U.S. In other words, the cost of imported products is going up. That's leading to, increased costs at the consumer end. And all of that's happening at the same time that we're seeing a weakening in the underlying economy, in employment growth and things like that. And so the challenge that we have in the months ahead is that, for Fed policymakers, they're simply not sure whether the demand destruction that comes with a slowing labor market is going to be sufficient to offset the rise in prices that's happening as the U.S. economy becomes less efficient. And so, what this really means is that they're stuck between a rock and a hard place. It does look as if they're going to continue to ease policy. They're going to deliver, at least one, perhaps two cuts this year and continue that pace in the new year. But they're not likely to, push on the accelerator pedal as some of Trump's nominees are hoping for.
Karl, always great hearing from you. Thanks very much.
Thank you.
Karl Schamotta, Chief Market Strategist at Corpay.